Good morning. It's great to have your company this Monday, the 12th of July. I'm Jessica Amir, Senior Market Analyst with Bell Direct. Well, US bank stocks springboarded higher at the weekend ahead of reporting season kicking off, which helped US indices reach brand new record highs. The S&P 500 up 1.1%, rubbing out Thursday's 0.8% drop. The Nasdaq meeting a similar fate, up 1%, erasing Thursday's 0.7% fall. Now, what's key here is these patterns where investors buy the dips are likely to continue for now, and that's according to FactSet and Citi Research. Given one, the economy is eyeballing stronger growth ahead, and two, companies are set to report strong earnings recoveries. With that in mind, US earnings season kicks off this week. JP Morgan, Goldman Sachs, Bank of America and Morgan Stanley are reporting. Now, what's important to note is broad US earnings are expected to show a sharp 65% rise in earnings compared to a year ago. And that validates, I guess, the market's strong rally this year. Now, what to watch today locally? Well, firstly, the futures suggest the Aussie share market will rally 1.1% or 76 points, which will erase last week's 0.5% fall. But traders will be cautious because Sydney is bracing for lockdowns to potentially extend to mid-August, while in WA their restrictions come to an end. So for technical traders and investors, they might be watching these patterns. So we can see the moving averages here and the MACD, which is the moving average convergence divergence. Now, both are suggesting the market could pull back. So some investors will be looking to sell down securities that have gone up over the year and have done well, or inversely, some investors will be getting prepped to buy the dip if the market does correct. While others might be buying listed products like Bear, that's an ETF that goes up when markets fall. And the fourth group of investors, I guess, will be staying the course and riding the waves, given the ASX is set for a strong August reporting season ahead. Now, the second element to watch today, commodities. The oil price, WTI, that rose 2.2% on Friday to its highest level since 2019 on the increasing strength of the global economy. So oil stocks likely to charge up today. Secondly, iron ore. Well, that price fell 0.3% to $216 US. However, the iron ore price, it's important to note, it's back in record territory. So this is supporting iron ore stocks ahead today. Now, we also saw BHP listed in New York up over 4% on Friday. So Aussie iron ore stocks could do well today. Now, the second focus more broadly this week is economic news. Today, building permits out for May. The market is expecting a fall of over 7%. Tomorrow and on Wednesday, we get business and consumer confidence data. And Thursday, we'll get unemployment figures for June. Now, trading ideas that could be worth a look. The first one is De Grey Mining, DEG. And this is a gold speculative buy stock for Bell Potter, and the broker increased their price target to $1.71, implying almost 40% share price growth in a year. Now, Bell Potter says it likes that DEG's results were recently strong. It showed that their grades were at the upper end of their expectations. This means that their resource has the potential for being a tier 1 gold project, producing 300,000 ounces per annum of gold over 10 years with a long mine life and low costs. And Bell Potter also likes that De Grey is in a top mining jurisdiction. But we can see by the two charts here, the moving averages suggest that the stock is trending lower, but the indicative MACD, moving average convergence divergence, suggests that this downtrend could likely be over. And once these two lines head to this line here, the blue line, then the stock is suggested to move higher. Secondly, for your information, Citi has downgraded both Afterpay, APT, and Zip, Z1P, downgrading their price targets amid global competition increasing. Afterpay's target reduced to $125, Zip's target down to $10.25. Now, Citi notes that Afterpay's app downloads were up 12% in the US in June. Website views also up. In comparison, QuadPay, which is owned by Zip, mostly by Zip, they had a soft June. App downloads only up 3%, while website visits to QuadPay were down. The bottom line for earnings, Citi dropped Afterpay's FY21 earnings expectations by 5%, and Citi also dropped Zip's cash EBITDA by almost 60%. This is primarily reflecting higher costs. And lastly, trading ideas with bullish charting signals. They've been seen in Moto, VMT, Macarthur Minerals, MIO, and Unibail-Rodamco-Westfield, URW, and that's according to Trading Central. I'm Jessica Amir. Stay safe and happy trading.